The Crypto Markets Update is presented by Grayscale, the world's largest digital currency asset manager.
Here's our live look at Bitcoin. The CoinDesk Bitcoin price XBX index is currently trading at $32,523. Bitcoin is down almost 3% over the past 24 hours, and the CoinDesk Ether price ETX index is trading at about $19.77, just under $2,000. ETH is down about almost 6% over the past 24 hours. And joining us now to discuss the crypto markets is Haohan Xu, founder and CEO at trading platform Apifiny. Welcome to the show, Haohan. So I wonder, your trading platform, what kind of volumes are you seeing right now? And does that give you some insight into an outlook on Bitcoin?
Yeah, so we're actually trading network, so we're connected to multiple exchanges. So we currently don't operate our own matching engine, but from what we observed, the market has actually been really stagnant. After the China crackdown, so volumes on Bitcoin was down 40% on major exchanges. But good thing is Bitcoin has been holding the line in terms of price, and we're seeing more insights on chain as well. There was a recent report that came out by Chainalysis. That shows that 73% of Bitcoin is held by investors actually, versus just a little bit like 58 or 60% for Ethereum, and around 40% for USDT. And actually, meanwhile, 7% all Bitcoin are held by traders. Like, these are the people who are performing high frequency trading. Some of them are probably market neutral since they're just running arbitrage across the exchanges. Some of them bet on market directions, but I don't think 7% will be a large impact on the price. And this number is 18% and 20% for USDT. So we can see from the on-chain data that Bitcoin's main use case currently at this moment is still for investing in the long term, like most people are hodling. And Ethereum is actually being traded more often than Bitcoin compared to before. And we can probably guess that its main use is powering decentralized finance. And stable coins such as like Tether, USDC are still the most frequently traded type of assets. And there are two main use cases that are pretty obvious: trade settlement or just parking money for opportunities. And also we've seen that Bitcoin dominance has dropped significantly this year so far. But good thing is a lot of money has been flowing to altcoins and Ethereum. So this is actually not bad news. It signifies more adoption into the general blockchain space.
Haohan, how do you see that relationship with the stable coins in the markets? And do you see them as potentially driving the doldrums, if you will? There's an argument being made that, in fact, it's because there aren't new additional stable coins such as, let's say, Tether since the month of May going into the market, that's why we're seeing this drop-off in volume, drop-off in price in Bitcoin and Ether, versus the other argument, which is the reason you're seeing a drop-off in stablecoins is because there's a lack of interest. Is it the tail wagging the dog, or are we seeing this kind of action in fact?
I actually don't think it has much to do with stablecoins. So the main drop in the market actually happened on fear, right? China's crackdown and the world regulators cracking down crypto exchanges, Binance obviously being one of the obvious ones. But stablecoins, in fact, has actually been doing really well. So USDC, in fact, has actually surpassed Tether on Uniswap trading. So Ethereum against USDC trading pair is actually one of the most traded pairs on Uniswap, versus before that was Ethereum against USDT. So I think in the stablecoin front, it actually has been doing quite well. And you see Coinbase recently is listing USDT. So I think on the stablecoin front, the market is actually having more proof of stablecoin, and I think having more stablecoin in the trading market, especially, will help liquidity and trade settlement. So I think it will be a catalyst for the space in terms of trading.
Interesting. One last question, Haohan. The CPI numbers just came out in the United States. Things are more expensive than expected. Bitcoin has been widely touted as an inflation hedge, and yet Bitcoin and the crypto markets are down. Do you have any explanation for that?
I think one of the things is a lack of upward pressure. So a lot of the demand actually came from China previously. So obviously I can talk about the crackdown here a little bit. I think the crackdown this time is very serious. It's very purpose driven, right? And it's definitely not over yet. So if you think about it, if China really did not like crypto, it would have done this crackdown in 2015, right? Or in 2016 when it was cleaning up ICOs. They were equipped with the same tools that they have today. But the crackdown this time, I think it's part of a much bigger capital markets control plan. And the plan is very evident through the crackdown on crypto, what happened to Didi, the largest ride-hailing app in China, etc. So no one will really know the detailed agenda behind the plan. But one thing is obvious, that the crackdown crypto will help drive the stock market in China grow. So like, if you grew up in China, you know that like you only had a couple investing options, right? Housing, stocks prior to crypto. But now when crypto came out, crypto became the third option. So you see in China that recently they put on some market restrictions in the housing market. So like if you buy a house, you can't sell it, within 5 years, otherwise you get taxed. And then you see the crackdown on crypto. So that's being left with the stock market, and that's very evident, right? Since May, you see a lot of upward trend in the Chinese stock market. So I think they've achieved what they wanted to achieve. And I think that justifies for a lot of why Bitcoin's falling.